Good afternoon, ladies and gentlemen, and welcome to this Action Day event on integrating sustainability into insurance underwriting. This session is co-hosted by PSI and the Swiss Insurance Association. My name is Christine Schulze, and I'm the Sustainability Officer of the SIA. Our organization represents the interests of around 70 insurance companies, which include many national level and also globally active primary insurers and reinsurers. When it comes to underwriting, Swiss insurers account for 3.5% of the global premium volume, and 2/3 of this small proportion are generated outside Switzerland. So helping clients to tackle environmental and social challenges is part of our industry's commitment to sustainability and our vision to make the world more resilient. And environmental and social risks, however, require special attention to ensure sustainable progress. Underwriters are very much on the front line and face difficulties and the complexity in assessing the wide range of ESG risks, from climate change to environmental issues, biodiversity, business and human rights, and also social migration and social mobility. In 2022, the Business School of Lucerne has conducted a non-representative analysis amongst our member companies, and that study revealed that many of the Swiss insurers have begun factoring at least sustainability into their underwriting processes and practices. Issues that were once seen as purely reputational or part of corporate social responsibility seem to become integral to sound corporate governance, both as a source of risk, but also as potential opportunities for the environment and for the society. The industry therefore welcomed the guidelines from PSI on non-life, life, and health insurance. And so we're going to start this session with a brief presentation from Diana Diaz, Program Supervisor of the UNEP Finance Initiative, Principles for Sustainable Insurance. And then we're going to have a panel discussion with a focus on ESG as essential for underwriting, while touching upon approaches to handle the complexity and to cooperate in order to enhance the industry's role. So just one more organizational information. You see the QR code on the slide. During the session, you can submit your questions and questions of other people if you think they are important, and we would encourage you to do so because in the panel discussion, we will answer your questions. So that's all for the start. Please join me in welcoming Diana with a warm applause. Thank you.
Thank you, Christine. And before we start, I want to tell you about an anecdote from the last couple of days. So yesterday, I was talking to one of my colleagues, and she was talking about movies that featured insurers. I was very curious, and so I went home and I was Googling, what are some movies featuring insurers? I was surprised to find out that actually there are quite a few. But most surprised I was to find out that actually they all shared the same plot. An insurance expert, bored with his monotonous job, decides to embark on a new adventure. And I realized it's interesting, but also it shows that a lot of people think that the insurance business is boring. And so it's not a surprise to not see this room very full, but all that to say, I want to thank you all for being here today. For those of you who think the insurance business is boring, I hope by the end of the session you think it's exciting. And for those of you who are already in the insurance business, I hope you think sustainable insurance is the new exciting adventure that you are going to embark on. So let's get actually to the point of the session today. Let's look at the events that we have on the screen. What do they have in common? What do you think? Well, one thing, they all happened in 2023. Second thing, they are all part of the same global history. As urban populations grow and our climate continues to change, weather-related disasters such as hurricanes, floods, droughts, and storms become more and more intense and frequent, posing a threat to our people, communities, and economies. However, millions of households and businesses face a large insurance protection gap. Only last year, if we look at the protection gap, only 45% of all global economic losses were actually insured. In Switzerland, even, which is one of the countries with the highest insurance coverages in the world, that gap reached 73% last year. There is one reality that we need to recognize. The frequency and intensity of extreme weather events and the devastation of its consequences will only be accelerated by the triple planetary crisis: climate change, nature and biodiversity loss, and pollution and waste. As UN Secretary General said, we have been poor custodians of our fragile home. The triple crisis is threatening the survival and well-being of millions of people around the world. But he also said there is hope. And there is hope indeed. But there is also a growing pressure on all sectors, including insurance, of course, to respond and find solutions to these sustainability challenges. So what can the insurance industry do? Let's think about it for a moment. Before I actually give you our answer, let's play a game. So raise your hand if you think that insurance is an antidote. And what I mean by that is it's a mechanism and a financial shock absorber that we use only after disasters strike to help us recover. So who thinks insurance is an antidote in that sense? All right, a few hands. Now raise your hand if you think that insurance is a vaccine. That is, that the insurance industry can actually play an active role in reducing negative impacts and increasing positive impacts. All right, many more of you. So the good news is everyone is right. So insurance is one of those very rare medicines which is both an antidote and a vaccine. There are three roles that the insurance industry can play when it comes to contributing to economic, social, and environmental sustainability, or in other words, sustainable development. One of the most important roles of the insurance industry is, of course, the role as risk managers. The whole insurance business is built around understanding and managing risk. So the industry's capacity to understand, quantify, prevent, and reduce risk is fundamental when you talk about sustainability challenges. Obviously, another role is the role of the insurance industry as institutional investors, with the insurance industry globally having over $30 trillion in assets under management. Finally, but equally important, is the role of the insurance industry as risk carriers. And that is the ability of the insurance industry to absorb financial shocks, to risk investments into the economy, and most importantly, contribute either positively or negatively to the issues that we face through their underwriting activities. This last area has been largely underdeveloped over the years, and that's why we want the focus of this session today to be on that key aspect. But what do insurers need to do to harness their power to fulfill their role in enabling a sustainable society? That's where the principles for sustainable insurance come in. The PSI is a global framework for the insurance industry to embed ESG issues into the insurance business. The PSI, as well, is based on the 4 principles that you can see on screen, and we think that the action needs to start by embedding ESG in the decision-making of insurance organizations. But it doesn't stop there. We also need to work with clients and business partners to raise awareness about these ESG issues. And that's not enough. We need to go an additional step and an additional level. And that's why we think that engagement with governments, regulators, and other key stakeholders is also very important. And finally, of course, demonstrate transparency. The evolution of the PSI in understanding ESG risks in the insurance industry has taken a very long time. So over the last decade, the PSI has developed groundbreaking research on sustainable insurance, particularly looking at the underwriting angle. But I've been asked today to talk particularly about what we call the ESG guides. So this is global guidance developed by the PSI that could help organizations embed ESG issues into the core business of insurance companies in the context of underwriting, both for non-life and life and health insurers. The guide for non-life was published in 2020, and it was the result of a multi-year collaborative effort with leading insurers and key stakeholders through a global consultation process that was co-led by Allianz and the UN. Both guides provide recommendations around key areas. Those are the 8 key areas that you can see on the screen, and they are looking at sustainability governance of the organization, how to make decisions, all the way to reporting. The non-life guide shows how insurers can develop a systematic approach to managing ESG risks such as climate change, environmental degradation, protected sites and species, animal welfare, human rights, corruption, and it includes some heat maps. These heat maps indicate the level of potential ESG risks across different lines of business and different economic sectors, from agriculture, chemicals, defense, energy, all the way to infrastructure, manufacturing, and utilities. And this is an example of what that heat map looks like. On the other hand, the Life and Health Guide was the result of a collaborative effort led by HSBC Life and the United Nations and was published last year in 2022. The guide is the first of its kind for life and health insurers. It shows how various ESG risks, such as antimicrobial resistance, such as climate change, ecosystem degradation, human rights, or lifestyle behavior, can impact 4 underwriting risks, namely those of mortality, morbidity, longevity, and hospitalization. The heat map shows not only the potential impact, but also some examples of risk mitigation measures that insurers can use. And we can do an entire session only explaining these guides, but I know we are going to have a very interesting discussion. So before I finish, I just want to encourage everyone to check all the other documents and guidance that the PSI has created over the last years on underwriting, specifically looking at issues such as net zero insurance, nature positive insurance, adaptation, the protection gap. But before I finish, I just want to mention that all these frameworks, guides, and documents are only valuable if there is adoption and implementation. So I want to close by saying this. Ambition is the first step, but action is the second. Thank you very much.
Merci. So thanks a lot, Diana. Also, warm welcome from my side. My name is Hendrik Kimmele. I'm a senior project manager at Swiss Sustainable Finance, and also on behalf of Swiss Sustainable Finance, thank you to the Swiss Insurance Association and UNEP-FI to include us in the discussion, because we think that not only the investment and financing side, but also the insurance side is an important topic helping us in the transition. Before starting the panel, we heard that insurance companies really face more complexity, more interconnected risks, also related to ESG factors. Our panel therefore focuses on gaining an understanding to really effectively identify, manage and mitigate these risks, by also that insurance companies live up to their commitments regarding sustainability. Before we start the panel, let me quickly make you aware again of the option to have Slido ready and post your questions. I get them on my iPad and will include them in the discussion. So we're really looking forward to also get your feedback, your input from you as an audience. Let me introduce you to today's panelist. We heard Diana Diaz. She's a PSI program supervisor at UNEP-FI. Thank you for your insights in the keynote, also for laying the ground for this panel. We have Amandine Favier. She's head of sustainable finance at WWF Switzerland. They also published a report on sustainability in underwriting, so quite nice that she's here. We have Linda Freiner. She's the group head sustainability of Zurich Insurance Group and also board member of PSI. So thank you, Linda, for being here. And then last but not least, Professor Florian Schreiber. He's a professor and insurance lead at the Institute for Financial Services at the IFZ in Zug. So let me start with the first question, Florian. Together with the Swiss Insurance Association, you did a survey on sustainable underwriting practices in Swiss and global insurers. What were your findings from the samples? What ESG risks were identified by your companies, by the survey respondents?
Yes, so we conducted a survey. So first of all, we have to say it's non-representative. So it's comprising a part of the members of the SIA, and we did the interviews in the time before, for example, the exits also of the NCIA happened. This is also something that we should keep in mind. And yeah, what can we say? So in general, I think there's no one-size-fits-all answer, right? So we had, of course, or in general, we have companies in Switzerland that are operating internationally, right? So very big insurance companies, big reinsurance companies. Others are just doing business in Switzerland, and of course, depending on your core business, things look a bit different, right? So what can be said regarding the results is, for example, that the bigger insurance companies, they are, I would say, the front runners compared to the smaller ones. So you see differences at the current maturity stages when it comes to the integration of ESG aspects into the underwriting. And I would say regarding also the bigger ones that, so regarding the dimensions that we have, let's start like this. So most is concentrating on the E, right, of the ESG. Only few is concentrating on the S and the G. And the main answer was that if you're doing business in Switzerland, thankfully we are not that affected by S and G issues that much if you compare it to other countries, right? So if we talk about human rights, if we talk about child labor, this is something that in Switzerland is not a big issue for insurance companies. But of course, if you're doing multinational business in developing countries, right, this is something that you need to concentrate on because that's a bigger issue. So what can be concluded? So we looked at many different aspects. We saw that there's no one-size-fits-all answer, right? So different maturity stages. The bigger ones are kind of the front runners doing it for more than 10 years. The others are rather the followers. Some have not even started yet any missions, right? So yeah, that's what I can say. So as a first overview of the sample.
Thank you, Florian. I want to move to Diana. Diana, you talked about these ESG risks. We heard from Florian that the insurance industry taking into account ESG risks, but the PSI have also been around for some time now. Where do you see the biggest barriers in moving this ESG agenda forward in the insurance market?
Well, I have to start by making the disclaimer that each insurance business is different depending on the line of business that they have, depending on their geographic location, etc. However, through our experience working with over 200 member organizations around the world, including more than 150 insurance companies representing a third of the world premium, what we have seen is that there are some common threats and there are some common barriers. So one of them has to do with actually sustainability governance. So for many companies and organizations, the problem is not how do I get to net zero, how do I become nature positive, but how do I tell my management that sustainability is important? How do I convince them that we need to take action? And in many cases, you find insurance organizations where the sustainability team is only one person who is probably also doing the marketing and also doing the communications for the company. And then they have the responsibility to also take over sustainability and convince the organization that actually integrating ESG is important. So that's one key barrier that we have identified. And not even just for small organizations, but even in large organizations, that is also a challenge. And Linda can maybe talk more about it, about how to make sure that ESG is actually embedded at all levels of the organization. Another common barrier that we have been able to identify comes on the technical side. When we talk about insurance underwriting or sustainable underwriting, really many of the frameworks are very new, very recent. And so, for example, only last year, we were able to develop the first standard to measure insurance-associated emissions. And that we didn't have such a standard before, and that standard only exists now for commercial lines, and within personal lines only for motor. But what are we doing about treaty? What are we doing about agriculture? The methodologies are not there yet, so developing that kind of knowledge and those kind of frameworks is really, really important. And then last barrier that I'm going to mention is about the ecosystem, really. And so we can see that sustainability goals are misaligned in many situations with economic, political, and legal systems, and especially in specific jurisdictions. So you can see how these environments sometimes can be an obstacle in itself for insurers to take action in ESG.
Okay. Quite a comprehensive answer, I think, and as we see, so there are new frameworks in place that have to be implemented by the industry. Moving to Linda, you're heading a global sustainability team at quite a large insurance company at Zurich. When we look from an industry perspective, also in the historical context of integrating these risks, where do you see the main challenges of the integration and management of these risks?
I think back to Florian, what he mentioned that a couple of companies, us included, started already 10 years to build sustainability risk frameworks and really looking at how we were impacting different environmental, social, and governance factors through the business transactions. And we made a due diligence framework and really tried to integrate it into the underwriting guidelines. But the challenge is, of course, for a global company that operates in many different jurisdictions, guidelines are global, but actually situations are very different. And there's also a time aspect to this, and I think that's also a big barrier that Diana didn't mention, but we renew contracts on an annual basis. So when an underwriting is actually looking at a transaction, it is for the next year ahead. So many of these is ESG or sustainability-related risk. They're actually long-term. So for a very long time, insurance have said, well, actually, it's not an issue for us because we anyway renew it on an annual basis. But I think that's where the sustainability professional like myself comes in and say, well, actually, your customer relationships are much, much longer. So of course, we need to take a longer perspective on this particular transaction. a big barrier and a big challenge, of course, in this has been to train underwriters, to really making them understand why this is an important risk in the shorter term as well. It's also about providing them with data at the tip of their fingers, because oftentimes when there is the turnaround for a business transaction to make an offer, it's often very, very short. So they need to have access to the data. And if you make a parallel to kind of the investor side of our balance sheet, where our asset managers or investment managers sit, of course they have access to data because all the companies they invest in are publicly listed companies for the most of the part. When you sit in front of an insurance client, that can be an SME, it can be a public institution, it can be a multinational as well. So it's really hard to get out of that data. So there's quite a few things that we've had to overcome as an industry, and I think we're still in the starting blocks, and Diana alluded to that. The life insurance guidance only came out last year. We've done a bit more on the property and casualty side, but there's quite a lot of work yet to be done.
Thank you. Quite interesting. Amandine, coming to you, when we look at ESG risk, we heard from Florian, the E is in the focus. You have launched a biodiversity risk filter, which might help also insurance companies better understand risks that go beyond climate. Where do you see the insurance industry play a role in this transition, also help the real economy transition?
So thank you, Hendrik. I will make 3 points, if I may. First, on the long term, and you mentioned it, Linda, the issue of very long term and how can insurance manage middle to long term risk. Then I would like to quickly discuss on how nature-based solution can be actually an interesting way to for more resilience. And finally, I will touch upon the BRF. So on the first point, we really, we see more and more natural catastrophes increasing with the climate, and the biodiversity crisis is getting stronger and stronger, which make that indeed a lot of natural or events are being very hard to predict, and there is increasing risk. And here we really think that the best way an insurance industry can become more resilient and have actually a strong way to manage a risk is maybe not just to contribute to underwrite activities that are creating those risks. So we think that the way that the really insurance industry can manage long-term climate and biodiversity risk is to start by trying to be a catalyst for positive change and start to not underwrite activities that are creating climate change and biodiversity risk. So that will be my key message on the risk side, on the long term. And I agree it's a long-term perspective. On the second point, we also think that generally nature-based solution, so mangrove, for instance, is really for local community a way to become much more resilient. And here we will encourage our industry to start looking at how they can either contribute to the insurance of restoration of nature-based solution, or invest or finance in nature-based solution, because we think it's a very interesting way to manage, let's say, more middle-term resilience of local community. And third, so just to touch upon the tool we have developed, yes, WWF has developed the Risk Filter Suite, which is an online and free tool that can be used by company and financial institution to do a risk assessment, a biodiversity and climate risk assessment. There is over 80 data layers in the tool on biodiversity and water assessment. And I think we think it can be used by insurance industry as investors to identify in their portfolio which company are the more at risk from biodiversity and water, but also which company have activity within or location within a protected area. With the tool you can also see that, and then it's a first step for an engagement of the insurance, as an investor to engage maybe with hotspot company in their portfolio. And on the underwriting side, the tool also could be used also to assess which location are in area which are really biodiversity intense and sensitive, and can lead also to have an engagement with the corporate clients.
Thank you. Important topic, also move away beyond climate. I think that helps a lot. I want to put the perspective from ESG risks more now a bit to ecosystems, like acting in concert or acting together. When we look at unit PSI, has been in place since 2012, so quite for a while. Linda, we see on the one hand insurance company insuring, engaging with the real economy, they want to transition, but also insurers are dependent on the real economy transitioning. Where do you see the interaction between governments, insurers, customers to really facilitate the transition there? By also maybe a question from the audience, if there has to be a change in the industry. Now the question was removed, I don't know why. Maybe
we answered it already.
Yeah, so there was a question for paradigm change, but maybe in that context, where do you see the interaction really between governments, insurers, and customers to have the transition?
I think it's extremely important, and we are risk managers of societies. Our job is to send risk alerts, and which we reflect into the pricing. And as much as we would love to be the movers of shakers of society, we are not. So we are highly dependent on this ecosystem. And there's one stakeholder that you forgot to mention, and that is actually insurance is a highly intermediated business. So actually a lot of the customer relationships we do not have directly. We go through agents or banks on the retail side, or we go through brokers on the commercial side. So they also need to be part of the ecosystem, and I think that's a missing piece right now, where a lot of the reinsurance and the insurance companies have been driving a sustainability agenda, which have not been the same case with some of our intermediate partners. So that's something that we are of course trying to influence, and also on the umbrella of PSI, and bringing them in and bringing them with us in that dialogue. Now, when it really comes to the government engagement, it's extremely important. And I'm going to give you an example of Queensland, Australia, that has been hit by numerous times by devastating floods. The parts where governments decided to actually provide a state insurance schemes, because all the private insurance companies, they left when it became too expensive. They tried with a state scheme. Guess what happened? Well, there was a flood, and claims were paid out by the state to the insured, who went back and they just rebuilt the house in the same place with the same building material. What happened? Next flood came. And the same story again. Then there were other parts where they decided to actually build a flood levy and said, well, actually, let's invest, instead of building up a state scheme, let's invest that in a flood wall. And actually, flood came, and the residents in that area were dry. And actually, from that on, insurance companies started coming back into that area, because it's all actually the insurance risk is now insurable thanks to this work. So it's extremely important to have that dialogue with government and working together to make the risk insurable again.
Thank you. Diana, we heard some international, a global insurance company acting. When we look on an international level, do you see considerations in place? How can PSI support really this drive towards sustainability, and also against the backdrop of complexity, discussion about regulation?
So at the international level, there has definitely been some progress when it comes to ESG. So we see international agreements such as of course, the Paris Agreement on climate change. We had last year the Global Biodiversity Framework, which in many ways it's compared to the Paris Agreement, but on nature. We have the Sendai Framework for disaster risk reduction. And then we have new frameworks coming up, like TNFD, increasingly mandatory TCFD. So those policies, those frameworks are changing in general the ecosystem, but I would say that's not enough. Really, and this morning we were having another conversation on insurance with Amandine, where we were talking about the need for more regulation. So the work at the company level is really important, but systemic change is done through more regulation in these areas. So we need for all the insurance industry to move in the same direction. So it cannot be only one company, setting exclusion criteria or phase-out policies or doing the work on nature positive. We need the entire insurance industry to move in the same direction. And one way of doing that is engaging with policymakers and regulators. So from the PSI side, the second part of your question, how do we contribute to this? So we're a collaborative initiative and we're an industry initiative. So we engage, as I said before, with over 250 members from all around the world. And we provide this space for collaboration, peer-to-peer learning, to start thinking about how to embed ESG across all areas of the insurance business. We have developed very important guidance. So, for example, we have catalyzed the concept of net zero insurance. We have catalyzed the concept of nature positive insurance as well, and developed quite a lot of work, as I mentioned before, through the ESG guides, adaptation, protection gaps, and others. So, through these collaborative spaces, we bring different actors at different levels and in different locations as well, who are working together to address the same issues. And collaboration keeps being very important because these are global issues, the ones that we're talking about, and they need global solutions. So that's the space that we bring in terms of bringing insurance together. But since we are part of the United Nations as well, we are in this very unique position to facilitate conversation with other stakeholders, such as governments, which is a very important part of the discussion, and also facilitate the conversation with other stakeholders. So I'm going to stop there, but I think that summarizes what I think.
I want to jump in and take Florian back. With your survey, did the respondents also feel the need for guidance, for regulation? What were the answers by the survey companies, by the insurance companies that answered your questionnaire and interviews?
Yes, so actually, we didn't ask whether they are looking for a more stricter regulation in terms of sustainability, but in general, what we asked is that are you actively participating, or are you a member of different associations? And what we heard is that almost all insurance companies that we interviewed are part of different associations, right? And what are the advantages from their perspective? The first thing is, of course, peer learning, right? Knowing what your competitors are doing. Then you also have a benchmarking directly associated with peer learning. It's also about standardization. So what I can fully agree to what Diana just said. It cannot be that one company is going into that direction while all the others are going in that direction. And because at the end of the day, right, when it comes to being more restrictive in terms of underwriting, because you would like to say, I have a certain strategy, I'm not looking for those sustainability risks. This also means that you do not write the premiums, right, so compared to your competitors. And this is kind of a trade-off that you have today. And if you have a regulation and you have kind of a level playing field where everyone has to adhere to the same guidelines and so on, this is something what companies, according to the answers, would appreciate. On the other hand, of course, when it comes to an exchange, you have discussions regarding antitrust laws. This is something that also, I think, was in the public discussion regarding the NCIA. It's also about resources that you need to spend if you would like to actively participate. You need to send people to certain events. You need to send people to commissions, right? So it takes some time, it takes some money. And that's also kind of the cost-benefit trade-off that some companies are looking at. But what I just wanted to add in general regarding regulation, I think also if you take a look at the solvency regulation, right? So the more solvent the company is, the higher the product quality is at the end of the day. Because what you would like to have as a customer is that if you have a claim or if you have something in the future, you want your insurance company to be there, right? And if you as an industry have that regulation regarding solvency, every one of your customers, at least in theory, and every market participant knows that if you underwrite a specific risk, you need to underlie it with capital. It's associated with a risk. If you invest something, you can do that. You can do it even more risky than your competitor, but then you need to have a higher amount of equity capital, right? So the more solvent you are, the higher the product quality that you have, the higher your quality of your company. And I think we need something that goes into an almost same direction when it comes to sustainability.
We hear a lot about trade-offs, and I want to also include the audience, the questions that we see on Slido. Amandine, also in your report, you call for excluding certain sectors and On the other hand, we see that also less conscious business lines can be improved by integrating ESG factors. So we sort of also have this trade-off. And here's the question of examples where insurers deciding to not cover anymore some sectors, example, fossil fuels and some additional sectors. So maybe with an example, and can you sort of lay out where do you see the role of industry and politics in this regard? Industry and politics.
Industry politics, or exclusion, right? It's about
exclusion, and also like maybe an example I saw a lot in your report.
Yeah, well, on exclusion, so, and I know maybe we don't have time for the debate, Linda, you know? But yeah, so we think as the WWF that if you have a like 1.5 degree goal and you want to be net zero, like a lot of the insurance today or like the large insurance have committed to, there is just certain activities that you cannot underwrite anymore because it's just not compatible with this goal. So underwriting new fossil field, for instance, is not compatible with a 1.5 degree goal. Actually, another industry which is interesting to look like, that is less discussed, but in the 1.5 degree scenario of the International Energy Agency, also a fossil fuel car will have to be, you know, you cannot have fossil fuel cars. I think it's, I don't want to say something stupid, but it's 2025. So in the scenario, if I'm not mistaken. And this also is what it meant when you want to have a net, you know, if you want to be net zero. This is what it should mean. So we really think that for that, some activity are just not compatible, and yeah, you should maybe exclude, but even more important than exclusion is phase out. It's phase out, having transition plan, because when you have that, you think from the goal, you know, you have a goal and you think, okay, how can I reach this goal? And then you realize what's possible still to do and not. So the phase out of certain industry by certain deadline, and of course you have to have, how do you say, difference between developed country and developing country. We're not in the same situation, so that's why the transition plan has to be different. But that's really what we think is interesting. And one example, a famous example of exclusion is coal, and coal has been has been excluded and is more and more excluded by the large insurance. And you do see that the coal industry, I mean, we hear in some country have difficulty to find an insurance coverage today, and it's getting at least much more expensive. So it does show that it does have an effect, you know, when a lot of insurers, I won't say work together because apparently you cannot really talk about that anymore, but a lot of insurers are, you know, trying to really take exclusion criteria, yeah.
Okay, but I also see that ecosystems are needed, that there's a broader
and regulation
in this direction. Yeah. I want to move on the opportunity side, and also, you want to answer?
I want just to add something regarding the point that Amandine just made, and also the point that Linda had. So this was also kind of the result of our survey. When we talk about the E, it's most about coal, right? So the more the emissions is, then this is kind of restricted. But if you take a look, for instance, at Germany, right, the political direction in Germany currently is no longer energy from nuclear power plants. The coal is the thing to go. Now, what should you do as an insurance company, right? So if you compare not necessarily developing countries and developed countries, but also developed countries, Switzerland and Germany, right? In Germany, everything is coming from coal now because all nuclear power plants have been shut down, right? That's kind of the thing that the politics in Germany is currently fostering or facilitating. And in Switzerland, it's just typically, what we heard, coal is not a good thing. Also for the insurance companies, this is something that we do not want to have. That's kind of the trade-off that you have as an insurer if you are operating in different countries. And this is something, I guess, that not the industry can solve. This has something to do with the governments. And this brings us back to the point that Linda had at the very beginning.
Thank you, Florian. I want to move on a bit more now.
I can also talk about coal if you want. No?
Yeah, well, we have a lot of questions from the audience, so I really need to start working on the questions. And also, Diana, we discussed before a bit about underexplored, underdeveloped parts of the industry and opportunities to address. In this regard, there's a question from the audience, how we can also make risk protection more efficient in order to be affordable in developing markets. You also talked about a bit about it. Maybe you can.
Yeah, so actually we were having many conversations these days about risk and what to do in that area. But first I'm going to address the first part, which is about areas that are underdeveloped and under-researched. We could be here the entire day talking about that, really. So I'm just going to highlight a couple of them. So Amandine highlighted nature. Nature-positive insurance is such a new concept, and there is so much work that we need to do in that area. So if we think that, looking at net zero underwriting is difficult, let's start talking about nature. So we need to start by understanding nature-related risks. How do we integrate them into risk management frameworks for insurance companies? And as you said, we have been working on that 10 years in some companies, and now we need to start with the nature journey as well. So that's going to be a next big challenge. Looking at how to develop metrics, looking at how to develop targets to be nature positive. So that's a very important challenge that I hope we all can work on. Another area that I probably wanted to highlight, and was also mentioned by Linda, is life and health. So what is the role of life and health insurers in issues such as the transition to a net zero economy and decarbonization? So we have been looking at net zero from the angle of non-life. And for example, I was mentioning before the methodology that we developed in collaboration with PCAF to measure insurance-associated emissions. That is only looking at non-life, only looking at commercial lines, and not even all commercial lines. We are not looking at agriculture, for example. So that's another big area to tackle. We are not looking at life and health, and there is a big challenge there to explore when it comes to sustainable underwriting. So addressing all these challenges really, really is important. And as I said, we could be talking for hours about all the work that we need to do. But as I said before, action is more important. So probably that's where we need to start working on more and thinking about how do we actually help all the insurance companies implement all these frameworks that we are developing and how we can act much faster.
Thank you. Also, maybe you can address the question a bit on this developing, or maybe to you, Linda. You briefly talked about it, protection more affordable in developing markets, and also maybe new products.
I think it's not so much about new products, because honestly, the number of insurance products are not that many that you could imagine, because it's a house, it's a car, it's your pet, and so on, right? So there's not a lot of new products, but there's new types of technologies that we need to ensure. And that is a bit where some of the challenges are, because we are risk managers, but we don't really like to take risk. So we really need to understand the risk before we take it on. So that's one of the challenges. But if we look more on the protection gap and the developed world, actually insurance is not the solution in most of the places. You have to work a lot on just prevention and building resilience and actually making a risk insurable before you go in as an insurance company. And actually, we looked a lot. The whole microinsurance industry as such has really struggled, especially when there are big insurance companies coming in and wanting to do microinsurance in developing countries. They just do not have the knowledge and expertise to do so. So we've tried a lot of different routes now to do that and becoming better and better at it. So really work on risk understanding, risk assessment, prevention, resilience. Then risk transfer solutions is often actually the last point in that line that you have to go through.
Actually, I forgot to actually answer to your second part of the question, and maybe I can provide a bit of perspective from the work that we do with different insurance companies in other regions of the world. So, of course, we have worked with members in Africa, in Latin America, in Asia Pacific, and I can tell you that the priorities for them are different. They are definitely not looking at net zero insurance. They are feeling already the effects of climate change. They are working very heavily on adaptation. And so, while adaptation is part of the core of insurance activities, there is a lot more to do in that area. The protection gap is a big issue as well that we're facing. So I was showing before what is the protection gap in different regions, and you could see in regions like Asia Pacific, Latin America, it's over 80%. So how to penetrate markets, how to get there when, you know, the main thing that people are thinking about is surviving, not buying an insurance product, really. And then another important thing to address is the just transition. So many of these economies are dependent on fossil fuels, on oil, on coal still. So, you know, the livelihoods of many of the people in these countries depend on that. So we are talking about, you know, exclusion policies, etc. But how do we make sure that we are contributing to a just transition as well, especially for developing economies?
I saw that there's a question from the audience, so quick question besides Slido, and then...
Hi, my name is Vera, and I'm president and founder of the Geneva Coalition for the establishment of a public-private partnership to abolish child sexual abuse. And this is a topic that we're not talking about enough here in this conference, and I've tried to raise it a couple of times. But what I was wondering is, so this is an epidemic. It's an elephant in the room. It affects 20% on average, 20% of children in each country, or if we add that, close to 1 billion children. So what I was wondering if you could maybe try to help me rephrase it in terms that would be a business case. So from the insurance company's point of view, how do we make this case? Because we know that in adult life, people who are adults who have been affected as children and have gone through child sexual abuse have mental disorder problems. So it is the business case is potentially that it is a huge cost on society, and it is a sustainability issue. So can you help me translate this in you know, business terms from your aspect?
I would say it's, if we look at it from a sustainability risk, this is part of a social due diligence, and we've looked at human rights as a topic. I think the question, I'll throw it back to you, what data can you give me so that I can start screening for that in the transaction? So the data problem is a really, really important one. What do we base our decisions on? That's where I think some of these topics are really, really complex, because how do we get the data? How do we get the expertise and knowledge on particular topics?
I'm not a specialist at all, so I will just on this. But if I understand your question is really about health and health insurance and mental issue, right? So it will be a prevention for insurance to invest in prevention that is not happening, so there is no mental issue later in adult life, so if I understood correctly, if you translate it in an insurance, yeah. Prevention, maybe.
Yeah.
I would say.
So there were some questions from the audience. Maybe keep it short or post it to Slido. We also have some questions in Slido left that I wanted to address.
My name is Mike O'Callaghan from Global Vision Foundation in Geneva. I have a question. How sustainable will the insurance industry be in the face of the meta crisis and exponential growth of risks? Now, there's a concept called disaster capitalism, where, for example, when there's a pandemic or there's a huge flood, it's a profit source for insurance companies who can benefit from that. In the context of the climate change, for example, at what point does the risk and the damage threaten the financial viability of the insurance industry?
I think it's really hard to say. I mean, we only have models right now. So, and those models is something that is evolving very quickly. Traditionally, insurance used to make decisions on 100 years of historic data. We know that that's not quality enough today. So we're starting to do more and more climate risk modeling so that we can actually look into the future. However, there are a lot of jurisdictions that actually don't allow us to do that. And that's a problem, for example, in California, where we could only base insurance decisions on 20 years of data and not any kind of forward-looking data. So that's an absolute challenge where we go back to the ecosystem of how we solve that. We, of course, have talked a lot about that a 4-degree world is not insurable. I think we're still trying to figure that out. What is changing a bit is that insurance companies are looking at how can they actually, not just on the risk transfer solution, but how can they work on resilience and adaptation as a service so that actually customers are protecting themselves better so that we can actually insure their risk, and that's going to become more important.
Yeah, and if I may, and I would agree. I mean, that's what the point I tried to make at the beginning, that, you know, a 4-degree world is not insurable, and like you said very well, like we with the current biodiversity crisis, I really think there is no risk management, honestly, today of any insurance that can prevent or that make you will calculate a risk in a correct way. And that's why for insurance, for us to really manage the risk on the long term, they should really try to be sure that they're not underwriting or, you know, any activities that contribute to creating those risks, and also try to increase the positive impact they can have, because it's two sides. It's decreasing the negative impact, and they can have through the underwriting activity, and increasing the positive impact as well. We discussed a new product. That's one way. I mean, in the report we presented this morning, we gave some example of those new product or product, you know, insurance for renewable energy, but also claim management that we didn't have time to discuss. There's so many things that insurance can do in the way they manage claims, like repair over replace a piece, build back better is a very interesting way that insurance, you know, when a house gets destroyed or we get flooded, you can have in a contract from an insurance to replace a house or replace the heating system, but in a better version, a more sustainable version. So that's just a positive side. And I think both, you know, this positive and this negative, you know, decreasing the negative impact, increasing the positive impact is very important in the self-interest of insurance. So they can really, you know, contribute to be a catalyst of change. So the risk that, you know, of climate change and biodiversity will decrease and not, you know, not increase.
There's also a question in the audience. You were first, and then I will have one Slido question. And
I'll have mine of the One Goal Initiative for Governance. There has been about exclusions. There's been an exclusion of war cases for cybersecurity, and this puts tremendous pressure on insurers to have it accepted by states that this wasn't a war act, and of course war would then implicitly have been declared, and that would have, of course, some implications from the ESG point of view, what to do about that.
The cyber question. Cyber risk, I think it's even more difficult to insure than climate risk in the current climate. I mean, so there again, more and more is working on the prevention and the resilience side than the actual insurance solution. Yeah.
Maybe one question from Slido, as we see that we're running out of time. The question that was voted up is collaboration and exits of insurances from NZIA, and what does this mean for climate ambition in the insurance sector? So the audience is curious about that. Maybe someone wants to take this question.
Diana, you or me?
Both.
Yes.
So you can provide the company perspective, but one thing that I have to say is, as I said before, collaboration is key. We are facing global issues, and that requires collaboration, so that's not going anywhere. We need to keep working on these kind of issues together, and from the UN perspective, we are still committed to working with insurers, with banks, with investors on addressing these global issues. We know that the work that was developed under the NZIA is incredibly valuable, so we created the standard together with PCAF. We created the target setting protocol, which companies are now using to set their own targets, emission reduction targets, engagement targets, ensuring the transition targets. So that work is not going anywhere. It was fundamental. It was very important. Companies keep using it individually, even if they are out of the alliance. So that foundational work is not going anywhere.
And I was just going to add that none of the companies that stepped out of the alliance have changed their climate commitments. It was just in that the setup of the collaboration platform that was attacked. So I think that sends a really strong signal, and we will continue that work of developing the methodologies of understanding. I think it was mentioned in the beginning that we're just starting with a few lines of business, and we're going to continue adding to that. So I'd say none of the commitments from the companies involved have changed.
So as time is running out, I have the task to be on point. Thank you, panelists. I want to express some maybe good thoughts going out of the room. I think on the one hand side, we saw that there are a lot of challenges. On the other, I think we see that the insurance industry can be a facilitator also with innovative product, but frameworks are obviously needed in whatever form. And we see that there are initiatives out there that working on these frameworks. So I invite you, I see a lot of questions still in Slido, and there were some questions. I invite you to just come in front, and then later we can discuss about it. But at this point, I want to thank you on behalf of the Swiss Insurance Association and also UNEP-FI for this event, and thank you for attending this event. And I think this is also a starting point for the discussion. And have a great rest of the afternoon and enjoy building bridges. Thank you.
Hendrik, sorry, before we finish, I have one invitation and one challenge actually. And it's that next year we should be having an insurance day in building bridges. Right? Do you agree? Because insurance is an important part of the finance system, and it cannot be only one session in an entire event. You cannot build a bridge without insurance. I'm going to close with that. Thank you.
Thank you.